Hey everybody, Jeffrey Beamer here. Welcome to Earnings Call. This is a show where we talk about company earnings in each and every week. And if you're not familiar how that's handled, what we do is talk specifically about how to make money from earnings announcements each and every week right here. This is the week of September 15th, 2025. And although it's a pretty quiet week for earnings, we still have some names from various sectors, including logistics and transportation, from construction, and from consumer. So we got all that in store. Plus, I want to comment on President Trump's Twitter post today or X post today, as well as trades that we did last week and a new trade for you this week, all coming up right now. All right, so let's dive right into it. We have a pretty quiet week this week, but there are still some significant names that we have coming up on that will be declaring earnings this week. Okay, so how this list is broken down on the left hand side of the sheet, we have the movers. These stocks are anticipated to move over 10%, so double digits. And they do this on a consistent basis. On the right-hand side of the sheet are what we call quiet stocks. These are stocks that are move usually single digits, and we have a different strategy for each. So one strategy for the left-hand side of the sheet and a different option strategy for the right-hand side of the sheet. So we're going to begin on the quiet side. Let me show you an example of a quiet stock here first. All right, so we have Pfizer. Now, you'll notice the scaling on the right-hand side of the chart. This is a very quiet stock. It just meanders around. Each one of those candles that you see is one day. So we have a lot of time in here. In fact, I have all the earnings announcements circled with the ellipse. And you can see that this stock just doesn't move very much in general, but especially around earnings. For this, we do a strategy called an Iron Condor. We could do maybe a butterfly or maybe even a counter spread, although implied volatility might affect that a little bit. But there are a variety of strategies, but our key one is usually an Iron Condor. And we do this through a publication called Delta Neutral Income, okay, which is available to our subscribers. And you can learn more about that by going to ewotrader.com. All right. And for this list, let's take a look at what we have in store for this week. All right. So for the quiet list, we have just a handful of companies. And I want to point out to you one name in particular, and that is on Wednesday when we have Manchester United declaring earnings. And if you watch this show on a regular basis, you may recall that we actually had them declaring earnings last week. All right. Well, it turns out they pushed their earnings back. They went ahead and used that date as an announcement date of when they will be declaring earnings. And it just happens to be this Wednesday. All right. So we're going to talk about them once again. But let's begin by going down the sheet. Let me show you the charts. And we're going to begin with this company called Ferguson. Now, Ferguson has picked up on its implied volatility moves, or excuse me, on its statistical volatility moves, meaning what you can see in the chart. All right. Now, this is actually the previous earnings event back here in June, and you can see the stock gapped up after earnings that following day, a little over 10%. Okay. So as you can see here, this stock, which will declare tomorrow morning, September 16th, before market opens, that has an average move of about 9%. So plus or minus. So it could be a little above, it could be a little below. It's right there at that number. Usually those double digit numbers take us over, and we do those on our breakout stocks, which is on the left hand side of the sheet. But for right now, this is still a single percentage mover. And this is a $213 stock. And you can see how after the last earnings announcement, how quiet the stock got. I mean, just, yes, it did rally and it did move higher. Okay. But each day, the daily ranges and the daily move was pretty quiet. And then here the past week, the stock has picked up on some volatility. So we could see a bigger move for Ferguson. So how I would handle this is I would probably avoid Ferguson for this earnings cycle from actually doing a trade. I would just kind of watch it and see what happens. All right. And see if it does move a double digit move, which would take that average up into double digits. And we would then look at doing a different strategy for the next earnings cycle. All right. Now, jumping ahead, we do have Cracker Barrel. And as you may or may not know, Cracker Barrel was in the news quite a bit here recently when their CEO wanted to make some changes. And we're all familiar with when a company changes the direction of the company and pretty much ignores who their customer base is, like Bud Light did. Okay. And here, Cracker Barrel, the CEO, decided to take the company in a different direction and totally avoiding what their customer base likes and wants, and ended up dropping the new logo. They announced a new logo. They went back to the old one. So it will be very interesting to see what Cracker Barrel does here with this earnings announcement that will occur on Wednesday, the 17th of September, before market open. The average move here is about 8%. And that number comes from not only the average move in the past of what the stock has done, but I also take into consideration what the option market makers are pricing in. Okay. And so right now they're expecting a single digit move of about 8%, but this is a $50 stock, and a $50 stock that moves, say, 7% or so does get noticed, even though it does fall into the quiet classification for our purposes. All right. So again, Cracker Barrel would be one to watch because it has been in the news lately. Now, Manchester United, which we did touch on last week, this is only a $16 stock, and it will only move single digits. Okay. Most likely that's what the option market makers are pricing in. That's what its historical average does show. It's about 7% for the stock. Okay. So Manchester United will declare on Wednesday, the 17th of September, before market open. And again, only a single digit move. Now, into a stock that we have traded before and we do like to trade is General Mills. Now, General Mills will report on Wednesday, the 17th, before market open as well. The average move here is 5%. Now, the problem with this is, meaning, if you think about it, if you look at the scaling here, this is a $50 stock. So a move of 5% is just $2.50. All right. That's not a big move. Now, this used to be a much more popular stock to trade for us because, as you can see here, it was priced up at $75 last fall. Beginning of the year, it was still around $65. Now it's around $50 for General Mills. Definitely one to watch. And if we could do an Iron Condor on this, I would definitely do it, as it's just not a big mover. It's such a diversified company. It has lots of products. It really takes a lot for this company to move the needle around an earnings announcement, and we just don't see that coming from General Mills. Okay, moving on to the restaurant side of things, which does affect the consumer, is Darden Restaurants. They will announce on Thursday before market open. That's Thursday. Not July. That would be September. So let me correct that there. Okay. Before market open, the average move here is 8%. All right. The average expected move combined with the average historical move of the stock is about 8%. And you can see just this little bitty rally right ahead of earnings. We're not really concerned with stock direction ahead of earnings, with some exceptions. Okay. When we do get to one of those examples, I will show you what I really like going into an earnings announcement. But here, we're just concerned about the earnings announcement itself and what it does the day after earnings. This being a $200 stock, would probably be an ideal candidate for an Iron Condor. Okay, selling premium just because the stock just does not move very much. Now, I want to be sure my break evens were well beyond 8%. And that's actually pretty easy to do on a $200 stock as long as the bid ask spread is not too wide. That's one thing I would warn you about. Okay, let's move on to construction and home building. Okay, and that is Lennar here. Lennar will announce on Thursday, September 18th, after market close. The average move here is only 6%. Now, once again, for these stocks that are triple digits in price, and Lennar is one of those trading at $135. Okay, this is an ideal candidate for an Iron Condor. All right, and we would definitely be looking at Lennar once again. Now, if you're not sure what an Iron Condor is, I'll talk about it a little bit more because we did one of those last week. Okay, on our trade example, so you're going to want to hang around and see how we did on that towards the end of the program. All right. So only a 6% move here expected for Lennar. But here's the thing. We have a big Fed announcement on Wednesday. Okay. Is it going to be 25 basis points? Is it going to be 50 basis points? This is perfect for a stock like Lennar where they have earnings on Thursday after market close, because you could actually do the trade on Thursday during the trading day. Okay. That way the earnings announcement is out of the way. The Fed announcement is out of the way. We already know what the Fed, whether they're going to do 25 basis points, whether they're going to do 50, or whether they're going to do anything at all. That's the big question, and we will see what happens on Wednesday with that announcement. All right, closing out the quiet stocks for the week. Okay, we have FactSet Research. Now, this stock doesn't look very quiet, does it? Okay, I mean, this stock, look at this, has dropped from 450 back in July. $450 back in July, and this thing has fallen out of the sky, lost almost $100 in value. We're not so concerned about that. What we are concerned about is the move in the stock. Now, this is a stock that usually moves pretty quiet. However, I would definitely check the news, and I would see what is causing this sell-off in the company stock. And I might be, I would want to make sure there's no real pending news ahead of the earnings announcement. I would make sure that my Iron Condor, if I did one on this, and I would like this at a price of $350. This is a great candidate to look at an Iron Condor on, but I would make my wings on that very wide. Now, if you're not familiar with that terminology, definitely look into, there's lots of free online resources, including our website, about strategies and how they work and how to construct them. Okay. But I would make the break evens in this trade very wide ahead of this, not only earnings announcement, but, again, the pending Fed announcement on Wednesday. Okay. All right. So that is it for the quiet stocks. Now we get to the next group is going to be our breakout stocks. Now these stocks are much more exciting to trade. All right, they will tend to move double digits or more around earnings, and a lot of people like to trade these for that reason. Now we do these. The strategy we do for these is either a straddle or a strangle. So we are buying options, buying a call, buying a put. A straddle is where they're done at the same strike price. A strangle is where they're done at a different strike price. Your call is at one strike price. Your put is at a different strike price. All right. So this is done through a service we have called Delta Neutral Breakout. All right. And we put out trade alerts for these each and every week. And you might see an example of this here in just a little while. We're going to start here with FedEx. All right. Now, this is the largest cap stock. Excuse me, my chart jumping around there. This stock is the largest cap stock that's going to declare this week. All right. And let me go. I think we. I just jumped past my example. If we can, I will bring it back up because I want to show you Akamai. This is a typical stock. I like to show an example. Akamai, symbol AKAM. Both Pfizer that I gave an example of and Akamai do not have earnings this week. They have earnings in November coming up. Okay, but I showed these because these are prime examples of stocks that have a consistent pattern around their earnings events. We're quiet. Pfizer is a quiet stock. Akamai is not. Okay, this is a volatile stock, and it will move big, and it will move double digits around each and every earnings announcement. Okay, so that takes us to FedEx, and FedEx is one of those that used to be really, really volatile, but it has quieted down quite a bit. Okay, in fact, the last earnings announcement, it did have a nice drop. In fact, let me zoom in on this. 2 earnings cycles ago, it did have a big drop. That's the open down there. And then the stock rallied throughout the day. So it did gap down and have a much lower close. And then the previous earnings announcement here, you can see that we went from the low of the day, which was where the close was, and we dropped down to about 218. So from 230 to 218 and then rallied higher. So it has quieted down a bit from its traditional pretty big double-digit moves, and its average right now is about 10%. So it just takes us over. I did price out a trade this morning on FedEx, and they were option market makers are pricing in about a 12% move at the current number, but they will declare on the 18th, and that is not July. That is my fat finger that just can't, just get July out of my mind, I guess, for some reason. And we are on September. And so it will declare let me just double check that because I want to make sure that is all correct there. And it is Thursday, the 18th. Okay. Not the 25th. So let me bring that over here. Thursday, the 18th, right there. Okay. And it will declare after market close on Thursday. All right. There we go. Now, so we will keep an eye on what FedEx does. Now, this is, again, the biggest cap as far as market cap stock that we have declaring this week. All eyes will be on this company as it really does cover both logistics and transportation and how really the consumer is doing. It's one of the many data points on the consumer that traders watch, and we'll see how they do coming up on Thursday of this week. Also on Thursday of this week is going to be Scholastic. Yes, the book publisher. All right, and you can see the scaling here. I have to crunch down my numbers here just to get a better perspective in. This is $2.50 increments, so you can see the stock is pretty quiet, except around earnings. Okay, we went from about $21 to $26, so it's a $5 move on a $20 stock. Okay, so the last earnings announcement. Okay, so you go from around $21 up to $26. You're looking at a 20% move in the stock. Okay, so that is why this is here. The average move for this thing is 18%. All right. And Scholastic is pricing in another double-digit move right there. I checked this also this morning, and option market makers are pricing in another double-digit move for Scholastic. All right. Now this takes us to actually our trade of the day, which I'll get to in a minute. But because of a little data issue I'm having, I can't show the stock, but I will show the stock when I give the trade here in a moment. But that is on Dave & Buster's. Now, and the reason this is critical is because Dave & Buster's, the symbol is PLAY. Okay, stock symbol is PLAY. And let me just see if by chance we got an update. And no, we are not getting that data coming in. So anyway, I will show you the chart here in just a moment. All right, so let's do a quick recap on things. Okay, our list is pretty quiet on the breakout side. We really do just have 3 stocks that are going to declare this week. We have Dave and Buster's, which I was just talking about. We have FedEx. We have Scholastic. Okay, and then on the right hand side, we do have more names. Cracker Barrel, we like to trade that one. General Mills, we like to trade that one. Darden, Lennar, FactSet, we'd like to trade really all of those, especially the stocks that have $100 stock value or more, because we have a lot more choices in the option strike prices to put on a pretty big trade. Okay. All right. So with that, we're going to transition into talking about what we traded last week. And I'll also give you a new trade opportunity for this week. But before I do, I want to talk about an X tweet. Okay. I guess it was put out on X this morning by President Trump talking about his suggestion was to end quarterly earnings reports. Now, this is nothing new. Okay. These rumors and these types of requests have been around for a long time. Okay. And if it goes to a semi-annual basis, that's not necessarily a bad thing, but I want you to think about what might happen. Now, there are some talking heads out there that think, oh, this will be great, and this will reduce volatility in the stocks. My opinion, along with many other traders, is no, it won't. Okay, it will actually cause an increase in volatility, which would be great for a delta neutral breakout. Okay, because traders are now going to be playing a guessing game. But let me tell you why this probably won't happen. Okay, number one, investors, especially the big hedge fund managers, which I used to be a hedge fund manager. Okay, I can tell you, I do not like trading in a vacuum. I do not like not hearing from the company for 6 months until they announce a new widget or results. That is a long time. And my shareholders, okay, my customers, probably want to know much more about the stocks that I'm holding. And if I can't give them accurate, up-to-date information, then that decreases their confidence in the system. Okay, so while here's the thing, because companies can actually declare earnings anytime they want to. Okay, but they do it quarterly. In fact, if we can, let's jump back to Scholastic for just a moment, because my chart on Scholastic is a good example. If you look at where my vertical lines are on Scholastic, let me go back and get the previous. March 20th was the previous day. There it is. Okay, so let me pull all this in here. Look at the distance between earnings announcement from March to July. And then Scholastic went from July to September. Okay, you can see here on the daily chart the width here, and then a much quicker earnings announcement. So these companies can declare whenever they want. They could do it weekly if they wanted to. Okay, but just because they changed the requirement to maybe semi-annually every 6 months doesn't mean they will. Okay, I can tell you it will divide the market into 2 parts. Number one, the S&P 500, probably even the Russell 5000, all those companies will declare quarterly. Even if the SEC changes it to a 6-month requirement, they will still do it quarterly because of investors. Okay, investors will demand it. All right, who will do it semi-annually are micro caps, very small companies. It will actually save them money. Okay, but these stocks are going to be on the pink sheets, or they're going to be trading under $5. All right, stock companies that you've never heard of and that languish around that $3 or $4 stock price. Okay, so while there is some validity to it and the requirement could change, let me tell you, for as long as I can remember, this has always been talked about. But investors demand that regular quarterly appearance by the CEO to talk about new developments, what they're seeing in the economy, what they're seeing with employment, all those things. That is what their investors are thirsty for. So I just wanted to take a moment and talk about that. But as you can see here in this example, stocks already do. They're already declaring whenever they want. Okay, even though they need to do it minimum of quarterly. And we'll see. We'll see if there's any traction with this. But if it's like any of the other discussions about it, it will be some time before anything is decided. So an interesting tweet, fun to talk about, but in reality, investors probably won't tolerate it. Okay. They will require hearing from the CEOs on a much more regular basis, and quarterly fits the bill. So with that, let's get into our trades from last week. Okay. Last week we did an Iron Condor on Kroger. All right. Now this is what an Iron Condor looks like. Just focus on the black line on the risk graph side. So you have the stock chart on the left, you have the risk graph on the right. It outlines our risk and our potential profit. Okay, the red line, the red, the blue, and the green lines are just timelines and where we are in price. Okay, and what we want is for the stock to stay between the horizontal light blue lines that you see on the top and the bottom of the stock price. As long as it stays in between there, we will make money. So how did we do on this particular trade? Well, it was a great success. Okay, it did exactly what we wanted. It didn't move very much at all. Just a couple of maybe even just a couple bucks, couple dollars. Not much at all. About $1, I guess. In the end, there was a little volatility around it, but again, I'm focused on stock close, not the high, not the low. How did a stock close? That's the most important stock price of the day. Okay. You think it's the open? It's not. It doesn't matter what the open is. It doesn't matter what the high of the day is, where the low of the day is. It's the stock close that counts. Okay. And this stock closed right where we wanted to. It generated $110 per spread. Okay. Profit in just 5 days. Now that is a 28% return on risk. So the amount of risk that we took, which in this case was $390 per spread was our risk. We received a credit of $110, okay, because this was a $5 wide spread. When you do an Iron Condor and you're selling premium at a credit, okay, your risk is the width of your spread. That's $5 in this case, minus your credit, which was $1.10. That leaves $3.90 of risk. And for each spread that you do, you get, that credit is then accumulated up. So if you did 2, it would have been $220, $330 for 3, et cetera, and so on. But keep in mind, it doesn't seem like a lot of money, $110, but this is a hypothetical $10,000 account. Okay. That is a 1% return, a 1.1% return in just 5 days. Okay. 1 week. If you annualize that out, okay, that's a 16% return a month, and you annualize that out, and you're looking at, I misspoke. It's a 4% return per month. I was thinking quarterly still. I was thinking in quarters still. Okay, you annualize that out, and you're looking over 40% return annually if you just did one of these a week and you were consistently successful. Now, in reality, that doesn't always happen. We do have losses. We do have things that go wrong, but we are having a good run here, and Iron Condors have been working really well here lately. And this was another great trade for earnings call. Okay, so what do we have in store for you this week? Well, unfortunately, it is on Dave & Buster's. Okay, I do like the stock, and I do like how the stock runs around. And here you can see the stock price on the left-hand side. You can see the chart. And this stock does have earnings after market close today. Okay, so if you did a strangle on this, okay, buying a call at one price, buying a put at a lower price, okay, which is what we would be doing here, you were looking for that breakout. You were looking for that move. And if we don't get it, then we would quickly exit this and move on to the next. But the debit here is pretty small. It's a little over $200. So you don't have to risk much for this particular stock. It is a relatively inexpensive stock. It's only at $24. And that is why we like Dave and Buster's for today. All right. So this is a Strangle. We'll be back next week, and we will take a look at how Dave and Buster's does, along with the rest of the earnings that occur next week, because they occur each and every week, and we talk about it here live on Earnings Call. So everyone have a great trading week, and I'll see you again next Monday. Take care.